US producer price inflation rises a bit, but a rate cut remains on the table. The US dollar nears a 2-year high on the Trump trade. Australia's jobless rate holds, but employment growth slows. And there are signs of life in New Zealand's housing market. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ Senior Commodity Strategist Daniel Hines looks at how Australia's East Coast gas suppliers have dealt with Australia's entry into the global market.
It's becoming suddenly exposed to the vagaries of international markets, and it's something which is taking some time for the market to adjust to.
But first, in 5 and 5 with ANZ, US producer price inflation rose to 0.2% in October from 0.1% the previous month. But that was in line with expectations. The S&P 500 was up 0.2% by 4 a.m. Sydney-Melbourne time as traders wait for a speech by Fed Chair Jerome Powell later in the morning. Meanwhile, the US dollar index keeps surging on the Trump trade, nearing a 2-year high overnight of almost 107. Here's ANZ economist Bansi Madhavani on what that trade looks like.
So what's driving the US dollar strength right now is the anticipation of Trump trade's sort of impact, which is tariffs for its trading partners would be inflationary, and that would add to the FOMC sort of taking a very gradual stance towards easing. And that's supported dollar strength quite massively. It remains to be seen what the administration policies would play out once President-elect Trump does take office. But for now, the markets are sort of going all out on this Trump trade.
By 4 a.m. Sydney-Melbourne time, the US dollar index had backed off its overnight highs to be up just 0.1% at 106.48. The Aussie dollar was down just 0.01% at 64.74 US cents, while the Kiwi was flat at 58.72. Number 2. Australia's unemployment rate held at 4.1% in the September quarter data yesterday, although it was up 5 basis points on the September month's read. Employment growth, though, slowed to 15,000. That's about a third of its average over the last 6 months. ANZ senior economist Adelaide Timbrell says there are slight signs of a weakening jobs market starting to show through.
Labour market participation is still very, very high, but between labour market participation, the unemployment rate, employment growth in total, as well as the wage growth, all of these things are trending down a little bit, very, very gradually. So we don't expect to see a big change ahead for the labour market. It will likely remain quite resilient, but we are seeing slowdowns. And the moderation of hours worked growth heading into Q4, which was just 0.1% month on month in October, does mean we may see a little lift in productivity growth in Q4, again though from a very low base.
Number 3. The softening in employment growth and slight rise in unemployment came after data yesterday showed wages grew less than expected during the September quarter. Adelaide says this plays into the RBA starting rate cuts early next year.
The labour market is still resilient, but there are signs of a broad slowdown. So the very, very slight easing in the October labour market data, as well as the lower than expected wage print, all will add a little bit of comfort for the Reserve Bank to start easing the cash rate next year. We are continuing with our call that the first cut will be in February 2025.
Number 4. New Zealand house prices resumed their falls in October, down 0.5% after a surprise bump up in September. ANZ economist Henry Russell says despite the price fall, there are signs that the market is starting to turn as buyers and sellers become more confident against a backdrop of interest rate cuts.
There are signs that momentum is shifting in the housing market with a pickup in sales volumes and upward revisions to sales over history, which means they've largely come back to around the long-run historic average. We also saw days to sell fall, which, while at 46, it's a long way above the long-run average of 39. The shift lower does signal that the market may be moving on a tightening trajectory. All of that together does reinforce our expectation that house prices will recover through 2025.
Number 5. There was weakness in New Zealand's monthly partial price index data out yesterday, covering areas like food and rent. Henry says an index of the reported prices fell 0.1% in October. And while a lot of the weakness was driven by tradable inflation, there were signs that domestic inflation pressures are easing as well.
The Reserve Bank's focus is going to be on looking toward the medium term and whether or not we continue to see the ongoing slowing in domestic inflation. And a couple of components in the SPI, which are domestic components, things like rents and restaurant meals, which are significant domestic inflation components, that it was pretty reassuring release today on that front, which does indicate that this is not only a story of volatility in the weakness we saw today, but also that weakness in the economy over the past couple of years is now flowing through to lower domestic inflation.
Henry Russell there. Now, in our bonus deep dive interview, ANZ Senior Commodity Strategist Daniel Hines has been looking at the global trends affecting Australia's East Coast gas market as it opens up to the rest of the world.
The East Coast market traditionally has been a closed market with supply produced along that East Coast area and then consumed by local consumers. And it wasn't really anything but that. But since the development of LNG export plants in Queensland, we've suddenly seen a lot of that domestically consumed gas suddenly being exposed to international forces. So some of those producers are suddenly saying, well, I can get better prices for my gas from the LNG plants, who are then exporting it into Asia and even further, who are paying much higher prices because of a deficient market in those areas. So suddenly gas consumers in Australia are having to compete with a gas-fired power plant in China or even in Europe. So it's becoming suddenly exposed to the vagaries of international markets, and it's something which is taking some time for the market to adjust to.
You've done a note which looks at the prices of natural gas for domestic consumption, piped around no doubt, versus the netback price for LNG. Could you tell us about how those prices have varied and where the best prices are if you're a gas producer and seller?
Yeah, so going back to that sort of price-driven sort of incentive, a gas producer would look at the LNG export plants and the gas consumers here in Australia as two competing sort of clients. And the LNG export plants will pay that net LNG price, which incorporates obviously all of their costs associated into a final price that the gas producers would get. So when that price is greater than the domestic price, then clearly the gas producers would rather get a better bang for their buck. And so you see gas suddenly pulled out of the domestic market and sent to international places.
And it's interesting to see how the prices for LNG, both for contracted LNG and I'm guessing for spot, spiked through 2021 and 2022 as particularly European buyers and then Asian buyers looked to get hold of LNG in the absence of some of the piped gas going from Russia into Europe. How have the demand patterns from particularly Europe and Asia changed as the Ukraine war has settled down and we're now a couple of years on?
Yeah, look, those export plants were built around 2015, 2016, and we did see a huge shift or relationship between that netback price, that LNG netback price, and the domestic price. But the entire gas market was really thrown into disarray when Russia did invade Ukraine. And we saw, obviously, Europe suddenly lean towards that international LNG market more and more, and subsequently the prices rallied, and we saw any gas unit available to the market really sucked into the LNG as a consequence of that. That saw the real dynamics between the East Coast gas market and international forces really start to play an impact on where that gas produced here was eventually consumed. And it's something which I think is going to be an ongoing issue, considering the supply risks we still have in the market at the moment.
Daniel Hines there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, November the 15th. Catch you next week with what October retail sales data from China and the US today say about the state of their respective economies. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.